The Wyckoff methodology is a more than 100-year-old methodology for analyzing and trading in the financial markets based on a rules-based system devised by Richard D. Wyckoff. Wyckoff rules. Today, as we did in the classroom for over 30 years, we use the case study method to analyze, evaluate, and learn the Wyckoff method. At Golden Gate University in the graduate program, where we would teach this among other very important technical analysis tools and approaches. So today, let's continue in that thrust and do some case study work here in the current markets, which are fascinating at this time. Also, Tesla has been charging, and let's have a look at Tesla and do a case study there. Look at the FANG stocks. Today is a huge day for earnings for a number of the FANG stocks. Also, let's have a look at gold and gold shares if we have the time. Welcome to Power Charting. I'm Bruce Fraser, your host. Today's agenda, as you can see, we're going to be very busy. I'm going to go really fast. Stock market update. We'll look at the Dow. Let's look at the NASDAQ 100. Intraday, also with some longer term charts too. Biggest day for earnings ever as described by Barrons. At the time that we're doing this recording, we don't know what these earnings are, but they are earnings in the FANG stocks. So let's look at some of those. Today we're going to do an Apple case study. We're going to look at Google, Facebook, Netflix, do the Tesla case study, and gold and GDX as a campaign. Here's the Dow Jones Industrial Average, which we have been studying. This is a 60-minute chart, and you can see in June, ahead of the end of the quarter right here, you can see that there was a climactic surge, an upthrust and a throw over, overbought condition of the top of a channel that went all the way back to early April. This is the stride of the advance. Thereafter, the Dow Jones has gone down into the demand line of this trend channel. So let's go on and look at this chart updated through today. At the time we did this, the Dow was down 425 points, but has since rallied back some, still down on the day. But notice what's happened. There has been an attempt to rally off this demand line here, as we would expect, here and here. But notice that these rallies are not very good. We had said at the time that this was going to be a range-bound condition from the climax and the automatic reaction, and that the stride of the advance was at risk. But you can see here that there has been, after the attempt to rally, it's fallen down through the demand line and out of the channel that's been in force since April. So we have a range-bound condition, possibly a cause for distribution or reaccumulation. We're in the middle of a trading range now with the potential to go down to support and possibly, depending on earnings, maybe today, up through resistance. There's no edge in the middle of a trading range generally. We are looking for the conclusion of a structure here, which has been in place now for more than a month. So moving on, here is the just zooming in, same chart, tighter time frame. This is the chart we looked at a few weeks ago. Here's what's happened since. You can see that there's been a break of the demand line, and with that has come weakness in the Dow Jones. And again, we have risk down to support, and possibly we can build a cause for a run up. So far, this does not look like absorption is occurring, but we're just in a giant trading range, which could go on. Okay, moving on. Here's the NASDAQ 100. We put up this chart a few weeks ago on power charting and showed at the time, as a matter of fact, I think it was actually the day of this break, we showed a climactic surge, throw over, overbought of the channel, which is constructed with reverse use of trend lines, which we talk about. I've written about them in blogs, and you can go back and study how to construct those. This is all from a cause that was built back in the March-April lows, and this count has taken us up to this 10,683, 11,564 area, and we documented this accumulation area at the time in a number of indexes. Well, look what we did right into this point and figure count. We have accelerated into a climax and have become range bound. Well, now look what's happened. We bring this chart up to date through today, and there's been an attempt to touch the bottom of the channel. It's in the channel again after a test. That was an important test and a failure back in. But this whole area here could just be a big range bound trading range for some period of time to go. And it's a little too early to make any conclusions. It's not out of the channel. But notice that this rally is not a very high quality rally off of this bounce so far. So maybe today on earnings, we can get a better rally attempt, or we will watch very closely for a failure below the channel. Going into the 60-minute intraday chart, you can see that we have a touch here and here, which we're drawing a demand line, which is this light gray line, a beautiful touch here, a touch here, attempt to rally. This was a really good rally, and look at how it got going right away up into the climactic surge. Well, this rally so far is nowhere near as dynamic as the prior. So hovering above the channel and also important support, they are very close to each other, and this is based on a buying climax, drawing resistance line across that, automatic reaction, drawing a support line there, classic Wyckoff technique, and also, as Barrons said, earnings reports today. This is like the biggest earnings day ever. I don't know, and I have no idea what's going to happen to earnings, but let's have a look at a few of these stocks here today. And we will watch after the close with certainly intensity to see what kind of reports and the reaction that the markets give to this. So throw over and overbought, buying climax, and automatic reaction. These are all conditions we look for. This is a classic setup, and also let's not forget that there's a point and figure count objective that's been reached. We're looking now for distribution or reaccumulation at this point, and we're looking to build a cause. And this cause would be measurable with point and figure for some kind of a move up or some kind of a move down. Okay, a little too early to know. Here is Apple. Apple's such an interesting case study. And you can see a beautiful advance off of the March lows. So here is a wonderful stride upward. I've been looking and using Chaikin money flow as a tool to support volume analysis. Notice that at this cyclic low here in March, April, that throughout the Chaikin money flow was positive and only became slightly negative at the lows. So at the time of accumulation forming, there was slight negative and it went positive right away and remained positive throughout this really dynamic uptrend that we've had. Well, notice now that we have Chaikin money flow a little more negative, excuse me, where the money flow has become negative as prices have gone higher. You can see a couple of tails here pressing up against the demand line of the channel. This is actually a diagonal channel, which is a little more bearish. and it has fallen out of the channel, which was somewhat indicated by the negativity of the volume and the shaken money flow. So a good earnings report today that the market likes and puts Apple up would be important. This could start to look like possibly some distribution on a daily scale. And also notice that on the moving average of the OBV, that it is now turned down and is below that moving average. I'm going to pause here, clear my throat. Sorry about that. Okay, let's move on with Apple. We have more to show you. So here is a longer term, back to 2017 trend line, a reverse use of trend lines, overbought here. Look at the reaction that was the result at the end of 2019 after a throwover of this important trend line. Well, look here, another important throwover of this trend line and a failure downward into the 2020 March lows. A new trend line was drawn here, and here, this is normal use of trend lines, slightly oversold, set up a beautiful condition for a rally. And this rally is the one that we've been just studying on the daily chart. Again, look where we are. First of all, the dotted line is the overbought line of this channel, which is just a parallel of the demand line drawn off an intervening peak. I always try to put boxes around the points where the trend lines are drawn. Here is again, look what's happened. We have an overthrow of this steeper channel and also an overthrow of this reverse use of trend lines that goes back to 2017. This is an interesting place, and what would be best for the bulls would be some kind of a pause along here where Apple becomes dull and quiet, builds a cause for another move up. But if there's a sudden sharp move, which could be the result of earnings, which are coming today, and I have no idea what's going to happen. I just follow the price charts and let them tell me what to do. In right here, it's resting on the top of this channel. If it falls through it and through this longer term trend line, it's going to be firmly into the channel and may have to come down towards the bottom of the channel as it did here and as it did here and here. So with that in mind, also notice the relative strength. So the relative strength emerges into a good uptrend and up it goes. And these are the periods that we really want to campaign these stocks. Now I'm going to show you a point and figure chart here in a minute, but let me put in another trend line. So here, notice that I've drawn a reverse use of trend lines on this peak. Let's do something here. On this peak and on this peak. And you can see the intersection of the top of the channel here and here, and that this line is parallel to the other reverse use of trend lines and also is a throwover. So coming back through three trend lines could be an important moment for Apple. Let's just leave it at that. So we will be watching this closely. Let's look at the point and figure. There is a point and figure count here, and there is a point and figure count here that are reaccumulation counts, and let's have a look at those and see if they can tell us anything. So here is this large reaccumulation count, very wide, volatile period of trendless trading, and this is what's referred to as a mixed count, but notice that it goes up into this range area here, which we have not attained yet. The highest level that we've reached, 396 on the point and figure chart, we've touched 3 times, and now we need a breakout. Now, what's interesting is this very large count, which came in the area of the count line around 170, produced a run up to So far, 396. Point figure horizontal counting method rules. Now, we have a confirming count, and this confirming count is a smaller reaccumulation on the way up, which formed in the decline of 2020. And this count goes 420, 472 and confirms the bigger count. We love when that happens. And at the time that it confirmed, it started to rally again. It's a timing tool. When two reaccumulation counts then come into confirmation, that's often the time when a new trend begins. So here we can see two reaccumulation counts, they confirm, price objectives are higher than we are right now. Quarterly earnings per share is due soon. Well, it's actually today after the close, and the trend line intersects at the objectives, which is this reverse use of trend lines we've drawn on the point and figure chart. And this is a 3-box reversal chart using daily data and traditional scaling. But notice that at the point of these two objectives being met is also a trend line. So maybe Apple, if we were to have some conjecture here about what could happen, has a good earnings report, jumps up, or the market likes the earnings report, jumps up into the trend line overhead in this area, maybe throws over that trend line, fulfills the point and figure counts. So this is a wonderful campaign case study. We will continue to follow it and see whether or not Apple can fulfill these objectives. So really an interesting one to watch. Okay, Google. We'll just spend a minute or so on Google. Interesting in a couple of ways. Here's a beautiful trend channel off the March lows. Reverse use, you can see 3 points that this trend line is drawn off of. We only need 2. We look at trend lines to establish themselves very early in the uptrend. The term stride is used to determine the rate at which prices go up. So these 2 points right here, actually 3 points, said this is the stride that we're going to get in the long term in Google off of the March lows. We draw a confirming parallel line off of the low that intervenes these, and look at where we have this beautiful touch, sets up a fabulous rally in Google. Google throws over its all-time highs from February, and notice what happens. It becomes overbought, throws over, and also throws over this high. It's above the channel, and it becomes very volatile and now is in a trading range. So suspect that the trend is still good in Google, but it may have to spend more time building a cause for a move up, and we'll watch earnings to see whether or not the earnings can either drive it up back towards the overbought area, or maybe it takes it down towards the support area of the channel. One to watch at this time because of the vulnerability above the prior high. And you can see a lot of selling taking place at the prior high, and that is what's creating the resistance that we're seeing. Netflix is really an interesting chart. Netflix is you can see here a reverse use of trend lines here and here, and this reverse use of trend lines establishes the stride. Look how beautifully it works, and there's a touch right there of that trend line. And also notice that there's a climactic surge in July at the beginning of the new quarter, which is the exhaustion of the uptrend. Very important stock in the NASDAQ 100, as is Apple and Google. And so Netflix has already reported, so I'm just showing this because it's such an interesting chart. Well, look at the throw over of this climax area. Throw over, overbought right here, exhaustion, and turns back below this reverse use of trend lines and then falls precipitously from that area. Now, there's a trend line off the March lows where we draw the point here. This is a little wider than we usually want to draw them, but it still works. We get a good buying point here. Well, we have two touches here, and currently Netflix is resting on this traditional construction of trend lines right here, right now, and we can draw a parallel off the intervening high, which is what we do with this dotted line, and look at this perfect touch. Slight throw over of the buying climax and then a very sharp reversal. I believe this was on earnings, and a reversal down right back to the bottom of the channel. It's why we draw these channels, because they just are so helpful to us to be able to frame what's going on in these stocks. This is a beautiful reaccumulation structure right here. Maybe in the future we can do a point and figure analysis of that structure, but this reaccumulation set up a very important rally that followed from the 420 area where the count line is up to 570. So beautiful rally, and there may be more to come. Maybe another reaccumulation is forming right now. Let's move on. Okay, let's get into Facebook very briefly. Facebook stopped its uptrend before the other FANG stocks. Buying climax, automatic reaction, throws over a trend channel off of this point and this point. I didn't put the boxes. So you can see the throw over, that's exhaustion. It's above prior highs. And at that area, resistance forms, and look what it's doing. It's had an up thrust and a test. Now it's out of the channel and below it, and it's building some kind of a cause. Now this could be distribution or reaccumulation. We're going to get earnings. It's in the middle of the range here, and there's no edge in the middle of the range typically unless we've completed reaccumulation, and it doesn't appear we've done that yet. But it's encouraging that volume is diminishing as this area of trading goes on, because it shows that supply is generally not present. So interesting chart. Here's a reaccumulation structure schematic that we like to look at, and we use this in the classroom among many others. Dr. Pruden created this. And so you can see here, Tesla, this is a very old chart. You'll see that this all was formed back from 2014 through the end of 2016, and then an uptrend followed. Look at the beautiful construction, and it follows generally the schematic of a reaccumulation structure, with the difference being that there's a shakeout here. We don't show a shakeout in this, but those are the variations that we often get. And we will study those in Wyckoff methodology. Now, homework. Look at these three blog posts that I put up a number of years ago in Tesla, and it's a terrific chart, terrific stock to study, and I really enjoy it. I know a lot of people that have been focused on trying to short the stock, and I believe that for a number of reasons, it's not a good idea. And as we recently saw, but I want to go through this very briefly. Here's three segments that we use for point and figure counting, and I write about those in the blog. These three segments give us counts, and I'm going to show you that in a minute. And you can see here this beautiful area of decline, which is very reluctant to go down. The volatility is diminishing out of this as it goes down, and then it pivots up. This is actually a classic sign of absorption, completes the accumulation or reaccumulation area for an uptrend. Well, how big could this rally be? So at the time, and this is an old point and figure chart, I counted the first two segments, and I showed the counts here. 339, 377 from a count line of 179. That's more than a double. And then here, the second segment, 509 to 546, a lot of potential. in Tesla off of this area. And then there was a third segment, and I said, you know, count this on your own. And this, so I've now counted it on this chart so that you could see the full area. And this counts up 792 to 829. And so pretty crazy count, hard to believe at the time that Tesla had that kind of potential in it. And there's actually a larger count that goes from the backup over here, which is a legitimate point and figure count. And once we fulfill counts, then we go and look to see if there's anything else we can add. My tendency is to be conservative. And so that's what I did here, and still got these huge campaign counts. Okay, well, let's go here. Let's look at this area. This is the area that we counted, the three segments back 2014 to 16. Here is the count area, and it's superimposed on a vertical chart, and you can see that this is the count we got. And actually, if we take the slightly larger count, we get a count to around 900. Well, look what happened. We climbed over that and went up to around 950, and then had a very sharp reaction. But it came after this very large area here. So now we had to go through this another reaccumulation structure. Well, what's the count here? Well, this count goes up to a whopping 1875 to 2005. So this count ultimately became a very legitimate count with a climax and a test and a reaction backing up to where it broke out. And then this very big move occurred afterwards. Look at the relative strength. Relative strength is very impressive. My advice to people is when you have relative strength of the S&P in a positive trend like this, this is not a short sale candidate. And so I always use relative strength as an indicator of the likelihood of a downtrend occurring. And relative strength is an important part of that. Now, I've cobbled together 3 point and figure charts that I had to pull together, and we're going to have to conclude here and do the gold shares next week. But here is Tesla 3-box method 5-point scaling, and I've taken this area you just saw in green and carried it all the way across. This is 113 columns at 3-box reversal times 5-point scale, 1,695 points of potential in that green box area. We take the count from this little backup where the rally started from over to where it started. And this count across here at the 305 level counts up to 1875 to 2005. Well, we've just gotten up to the 1800 level. And so there is the potential to go a little higher, but we've basically done a great job of getting up to this area right here. And I'll conclude with, there's a great trading course for Wyckoff, and this trading course is done by Roman Bogomazov, and he's going to have free sessions on August 31st and September 1st. And then we have our weekly market discussion, which is on September 2nd. There's a free session there. And this is a great way to start your Wyckoff method mastery process. And with that, thank you so much for being here, and we will see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.